Thanks everybody for coming out. We'll get going here. So I guess we've heard a lot about what's going on in uranium these days. The price is heading up and everybody's happy again, but it's a long time coming. We are a uranium exploration company. We operate in northern Saskatchewan in Canada. We've been operating up there for a dozen or so years, so we've been up there for quite a while. It's a pretty close-knit group up there in northern Saskatchewan. And we've kind of lived through the downturn of uranium, waiting for things to come back. And I think we're at that point. I think the story really hasn't changed. If everybody's been listening to the uranium story for the last few years, the only difference is now it's actually happening. Nobody really knew when we were going to see this thing happening. I'll zip by that. So, and I wanted to start with a few things. The thing about uranium is it's very different and unique as a commodity, and there's a lot of things that people don't necessarily realize when they're looking at uranium. It does not operate the same way as gold or silver or copper or other commodities in that respect. And I've talked about this at length in past years, but I'm going to hit these points a little quicker. And the first thing being is it's price inelastic. And what I mean by that is, unlike a lot of other sources of energy, in terms of nuclear power, the price of the fuel is a very small component of the cost of generating electricity. It's like 5 to 10% of the total cost. The rest of it is the capital cost of constructing and maintaining a nuclear reactor. As such, the price of uranium has really no cap on it. It can double, triple, and it doesn't really affect materially the cost of a kilowatt hour. So we don't wind up in a situation where the price is going up and it's going to slow down because it's too high and nobody's buying it. They will continue to buy it. And they'll continue to buy it because there's really no alternative. Once you've got a reactor going, you can't switch over to thorium or something else. So that's one thing that's important to keep in mind. The other thing is that there's really no formal exchange for uranium. That is, there's no London Metal Exchange. It doesn't trade on an exchange anywhere. And transactions in uranium are done between the mining company or the producer and the utility that owns the reactor. And that's how these trades occur. So you can't just look it up and see what's going on a regular basis. And in terms of liquidity, a couple of dozen transactions in a month is a good month. So as a commodity, it's not very liquid. Finally, there's not a lot of transparency around the price. So we talk about the spot price of uranium, and we'll get into some of that as well, or the long-term price of uranium. The fact is 60% of the uranium that's traded is done on long-term contracts. So these utilities are signing up for delivery of uranium in 3 years, 5 years, 7 years out. And they don't have to disclose those. They're all done off market. So a producer and a utility have come up with their contracts, and they don't have to disclose the price. So most of the pricing of uranium is really not visible to us mere mortals. What we do see in terms of that price is the spot, which is about 10 to 15% of the market, and then another 15, 20% is long-term contracts that have been put out to tender, so they are visible to the world. So that's the bit of the primer on why uranium is a little different. Now this is the gold is the spot price of uranium over the last dozen years since 2011. The black is the long-term price as it's reported. And what brings us up to today, we see the price now, the spot's up around 74, the long-term is at 63. What happened 11, 12 years ago was two things. Kazakhstan was flooding the market with low-cost uranium, and ultimately what happened in March of 2011 is a tsunami hit the island of Japan, and they wound up shutting down all of the reactors. Their reactors represented about 10% of the world nuclear fleet, and all of that combined sent uranium prices down. What we've seen over the last dozen years is during that depression in price is mines are being shut down and production is being slowed down, and any development, any exploration has all been deferred. There's no money. It's all being put off, and that's what we've seen during that period of time. To the extent that over the last 3 to 5 years, the world's been producing 20 to 30% less uranium than we actually consume. So that overhang of uranium inventory has been chipped away over that period of time, and we're now to the point where we're running out, essentially. The other thing that's happened over this time period is nuclear has become much more popular. That is 10, 15 years ago, we all feared nuclear. It was a threat. And today, practically every country in the world is adopting it as part of their strategy for net zero. So it's all of a sudden the hero of a greener, cleaner world. So with demand taking off, with the inventory shrinking up, we're now seeing that price of uranium go back up. And what you see here, this incentive price, what we talk about, is essentially that band of pricing where we can start turning on mines again, where we can start looking at constructing new mines. There are lower prices that we could do that, but that's essentially what the world's been looking at, is once we get up to that point, we can seriously start considering building a mine. And we're just starting to ease into that realm. So there's still a lot of room to go. And to the extent that anyone mentions that, well, you missed it, you haven't missed it. It's really just starting in earnest. So that's the history of how we got where we are. Where we're going is this. The World Nuclear Association a couple of weeks ago put out their 2023 projections on supply and demand for uranium. And what you're looking here in blue, that is over the next 15 to 18 years, that is the production of uranium that will occur based on existing mines right now. And what you see in green represents the mines that are idle at the moment that can be turned back on during that period of time. Unfortunately, the orange line represents demand. And this is what they've projected as demand for the nuclear reactors that are being built around the world. China, in the last 5 years, has doubled the number of reactors they have under construction. Countries that have never thought about it before are starting to build reactors. So this is what's happening. Now, there's a bit of a saving grace in here. What you see in gray, the dark gray represents mines that are in development. So these are their assumptions and projections as to when those mines will come online. The lighter gray represents planned mines, so they haven't actually been blessed yet. And sadly enough, the really light gray are prospective mines. So, we're hopeful. We'll see if they come online. Now, the demand line, actually, they don't just put out a single line. The WNA puts out a range with a higher, upper, and lower scenario. So you see that the very lowest scenario just happens to bounce off the top of the production numbers. So if absolutely everything on that bar chart makes it in on time, because mining projects always come in on time, right? Well, yeah. Then we'll be okay, but only then. So this is the other side of the equation. So as people are talking about the supply gap that we're now seeing in uranium, this is where it's coming from. And in some of the recent conferences, fuel conferences, what we're seeing is there's almost a bit of panic. So the buyers of uranium, the contractors, are not concerned about the price of uranium now. They're concerned about being able to get their hands on it at all. And that's really the crux of it at the moment. So that's kind of the first thing that if you're looking to invest in uranium, this is going to hold you up for a while. The other thing that's going to hold you up for a while is this, and that is all the political division we see right now. The gray bars represent global nuclear energy demand, or consumed. So the United States actually consumes 28% of the world's nuclear power. It's all happening here. Then France, China, Russia, et cetera, down the line. The orange represents the known resources and reserves around the world right now. And what becomes evident is the people that are using it aren't the people that actually have it. And in past years, it's been a pretty fluid open market. So uranium has been traded pretty freely amongst countries with a few exceptions. But that's really changed up over the last 5 years as well. For instance, China, that I mentioned, right now they're projecting that in 10 years, China will be requiring about 150 million pounds of uranium a year, which is about the equivalent of what the entire planet uses right now. So everything China can get their hands on, they're stockpiling right now. So it's not available to the rest of the world. Russia, of course, right now provides about 12% of the world's uranium and does most of the conversion and enrichment of that fuel. And the world is trying to sanction the heck out of them. So that's becoming an issue in terms of getting your hands on Russian uranium. Ukraine, of course, there's nobody going to work at the mines right now. So that's an issue. Niger, they've had their 7th military coup recently in about as many years. So despite the fact that they are a large supplier of uranium, Orano, who is the French nuclear company, had to pull out completely. So that's become a problem. Kazakhstan, who's now the largest producer of uranium in the world, is pretty much committing most of what they do to China and Russia. So it's not available to the Western world in the same ways it might have been previously. In Australia, where most of the reserves are right now of uranium, up until now has had a moratorium on nuclear reactors. There are no nuclear reactors in Australia. But the current government is now putting through a bill to lift that moratorium. So now we have a country that's going to start building reactors, and they're also sitting on all the fuel. So this global division is also creating an uplift in price because you can't get a hold of the uranium that is available as easily as you used to be able to. That's number two. Number three is the size of the market. And this is what gets a little nutty, and I mentioned this in my 2 minutes on stage earlier today. Right now, the world consumes about $10 billion of uranium a year, which is a small market. There's $600 billion worth of coal produced a year. So it's less than 2% is the value of the uranium compared to coal. I mean, to the bottom line, I mean, there's 3 times more lead produced a year than the world consumes in uranium. So it's not a big market, and it doesn't take much money to actually muscle it around. The slide that I showed earlier today was this one. If you take the market cap of all of the uranium companies in the world right now, publicly traded, and add them all up, you got about a $42 billion industry. And 41% of that is Cameco. 26% is Kazatomprom, which is the Kazakh company, and then the remaining producers are about 17%, which leaves less than $7 billion worth of companies that are being leaned on to fill that gray gap we were looking at before. So it's a very, very small industry, and to the point where it's nuclear energy provides about 10% of the world's electricity right now. Yet the entire industry is about the size of a medium to large size mining company. So that's a thing to keep an eye on, because as more money now, because of the excitement around uranium, there's a lot of investment money coming into uranium. It's such a small market, it's just going to grow organically anyways, and keep things adrift. So, I think, when we're looking at uranium and looking at it as a potential investment, we have to remember that it's price inelastic. The price can just keep going up as long as it wants to. It'll still get bought. There's no real exchange. There's no real liquidity necessarily, and you can't really see the price on an hourly basis like you can in a lot of other commodities. But what will support the investments in it is that there is a supply gap. There is a shortage of uranium coming up, and it's going to get bigger. You can't get uranium as easily as you could before because of all the political division, and it's such a small market. All of these things are going to keep these investments strong and supported nonetheless, no matter who you really bet on right now in this particular industry. How does this play into Purepoint? Okay, well, let's talk about us. We've been working in northern Canada for a dozen or so years. Will used to cover us back in the day, so we've seen a few of these ups and downs over this time. And we've been able to put together over that time and through the downtime a pretty selective package of projects. We have 9 properties in northern Saskatchewan, all of which have been prepped and ready, and we've started drilling a lot of them. We still got a lot of drilling to go, so we're going to be pretty busy in the next year or so. We have joint ventures with Cameco and Orano, 2 of the largest uranium suppliers in the world, and they are financially and technically supporting a couple of the projects that we operate on their behalf. We're kind of their exploration arm in that regard, and because we've been at it for a while, we've pretty much seen everything there is to see out there. So we've got a great team that we've been able to keep together and busy for some time now. So it's a pretty good package. Again, it's exploration, so we're always looking to maximize the odds of us being the next big one. This is Canada, northern Saskatchewan, where the Athabasca Basin is. This is the area where all of Canada's uranium comes from currently. Primarily up that corridor that you see on the right-hand side. The 2 mines operating right now, Cigar Lake and McArthur River, are producing. The uniqueness of this area is, of course, the ore grade. You'll typically mine uranium around the world at 0.2, 0.5 ore grade. we pull it out of the ground here at 10, 20, 30%. Like it's a bit of a freak show. And it's an interesting place to be. And if you're looking at exploration companies, you'll find that almost all of them are operating here because the upside is massive. And this is where we play.